I always say, gotta cut through all that noise to find the gems, right? Well, today, um, we're going to dive into Forex swing trading.
Oh, yeah.
Yeah. And there's this fascinating YouTube video by the Inner Circle Trader we're going to use as a guide.
Okay, go.
So hopefully by the end of this deep dive, you'll walk away with a really clear, actionable swing trading strategy, something you can actually use.
Sound good. And what I find interesting about the inner circle trader is that right off the bat, he dismisses this idea that to be a successful swing trader, you need to predict, every little market move.
Right. It's like you need to be some kind of a market psychic.
Exactly. It's exhausting.
So what's the alternative? What does he say? Well, he focuses on efficiency, right? Instead of trying to guess where the market's going every single day, he looks for those high probability trades, the ones that pop up maybe a few times a week, maybe even just a few times a month.
So it's quality over quantity. I like that.
Exactly.
But how does he find these, like you said, high probability setups? Does he use some sort of secret indicator that nobody knows about?
Well, surprisingly, he actually uses a pretty common tool,
Okay.
moving averages, but he has a very particular way of using them.
All right, so I think most people, even if they're totally new to trading, have at least heard of moving averages.
Right.
So what's his unique take? What's he doing differently?
So he specifically uses the 10-period and 20-period exponential moving averages, or EMAs.
EMA's got it. So imagine these lines drawn on a price chart, and they kind of smooth out all the price movements. Now, a lot of traders might use these on, let's say, a 15-minute chart. Get in, get out, very quick trades.
Yeah, short time frames, trying to get rich quick, all that stuff that we try to avoid.
Exactly. And that's where he differs. He sticks to the daily chart.
Really?
Yeah, and for a very specific reason. He says that the daily chart is where you're more likely to see the actions of bigger players, institutions.
Oh, interesting.
Yeah, so instead of trying to track every single ant in the colony, we're looking for the elephants, right?
Love that analogy. Okay, so how does he actually go about identifying, let's say, a bullish setup using these EMAs?
Well, he uses this term, stapping.
Stacking, okay? What is it, like stacking profits?
Uh-huh. Well, the first building block is simple. It's when the 10-period EMA crosses above the 20-period EMA on that daily chart.
Okay, straightforward enough. So it's not just a quick crossover. We need to see more, right?
Exactly. This is where the stacking comes in.
Yeah.
He wants to see both EMAs pointing upwards, but also that the distance between them, it's increasing. And that signals to him that upward momentum is building.
Got it. So it's not just about the direction of the EMAs, but also the space between them. It's like the difference between a car slowly rolling downhill versus one that's accelerating.
Perfect analogy. But that daily chart setup, that's just the first step. It gives us that general trend. Are we looking at a possible buy or a possible sell? To really pinpoint our entries, we have to zoom in a little closer.
Okay, so we've spotted the elephant tracks on the daily chart, but we need to see where that elephant is putting its foot down. So what do we do?
We go from the daily to the hourly chart. It gives us a closer look at the price action, but it still aligns with that overall daily trend we already identified.
So this is where we start to see exactly where we want to enter trade.
Exactly.
Okay.
And here's the key on the hourly chart, patience. We're waiting for the price to retrace back to that 20-period EMA, but it has to have already made a swing high above it.
So the price goes up, pulls back a bit, and that dip becomes our potential entry point.
Yeah, and that pullback to the 20-period EMA often acts like a support level, a point where buyers might jump back in.
This is almost like the market's giving us a chance to hop on board before it, potentially continues in that upwind direction.
Exactly. Now, what do you think happens when we're looking at a bearish setup? Those opportunities to potentially profit from a downward move.
Okay, let me think. So for a bearish setup, instead of the 10-period crossing above the 20, we want to see it cross below, right? Again, looking at the daily chart first.
You got it. It's basically flipping the script.
Yeah.
That crossover below suggests potential bearish momentum. And just like with bullish setups, we want that stacking, both EMAs pointing down, distance between them increasing.
And then we'd head over to the hourly chart to pinpoint that entry, but this time we're entering a short position because we're thinking the price is going down, right? This is so clear. I love it. It really shows how important it is to look at these different time frames together.
You're exactly right.
They all tell part of the story.
It's not about just picking a direction. It's about really seeing what the charts are trying to tell us across these different time frames.
And speaking of different time frames, the inner circle trader makes a really clear distinction between What we're talking about here is swing trading and day trading. Why is that so important?
Well, it all comes down to mindset. Swing trades just naturally tend to take a bit longer to play out than day trades, which are usually completed within, a single trading day.
So basically, with swing trading, you need to be more patient and let the trades play out over a longer period.
Yeah, exactly. He actually says you have to let your trades breathe. And don't be afraid to hold on to a swing trade for a couple of days, maybe even weeks, as long as the market conditions are good, of course.
Right. Managing risk. Got to
Mhm.
stick to the plan.
Absolutely. And, that actually reminds me, he walks through an example, and it's a trade he actually missed.
He shows a losing trade.
Yeah, well, it would have been a losing trade, but it's actually a good lesson in discipline, right? It's about sticking to the plan,
Mm,
even when it's tough.
interesting.
So he shows this setup, and it's based on Fibonacci retracement levels.
Mm-hmm.
And we haven't talked about those
Yeah. Maybe another time.
in other times,
Ah.
yeah. But basically, the point is, at first glance, it looks like a good setup, a good opportunity, but when he really looks closer, it doesn't actually fit the specific criteria of his strategy.
So he's really strict. He doesn't just jump into any trade that looks good on the surface.
Exactly. He has a great line. He says, it's not about catching every move, it's about catching the right moves.
Mm.
He would much rather, miss out on a trade than jump into one that doesn't actually meet his criteria.
That's a good point. It's like being really picky, waiting for the perfect pitch to swing at.
Absolutely. It's
Huh.
about preserving your capital, right?
Yeah.
And, this is where that whole stacking concept comes back in. He's very clear. Even when you've got this potential stacking setup, you still need that confirmation on the hourly chart before you even think about entering a trade.
It's all about managing risk and waiting for those high probability setups, which, I guess that's what we're really looking for, right?
Exactly.
And I
Yeah.
think one of the things I really like about his teaching style is that he doesn't just tell you what to do, he actually shows you his charts. Like, he walks you through the whole process, step by step.
And I think that's so important, right?
Mm.
Because you can read all the trading books in the world, but until you actually see it being applied in real time,
Right.
it doesn't really click.
Yeah, and remember when we were talking about finding those really specific entry points on the hourly chart, how important that is? He actually shows you exactly what he's looking for. Not just generally, look for a pullback, but like very specifically, this is the kind of pullback I look for. This is where I like to see it in relation to other indicators, all
Yeah.
that stuff.
He shows those subtle things that, even if you've been trading for a while, they can trip you up.
Exactly. And he even says, like, make sure that the 10 period EMA hasn't crossed the 20 period on the hourly chart, even if the price dips below it. It's those little details, those nuances that I think, for me, are so helpful.
Absolutely. It's all about seeing those things, that might not be obvious at first glance, but can make or break your trade.
And I think this is a good place to bring in something you touched on earlier, this idea that big institutions, the really big players in the market, they might actually be using like very similar trend following models based on, those moving averages that we're talking about.
Yeah. And he even hints that they might have these algorithms, these really complex, institutional grade systems,
Wow.
but that at their core, they're actually not that different from what we're talking about here.
So it's like we're getting a glimpse behind the curtain, seeing how the like quote unquote smart money might be operating.
Exactly. It's not about some kind of magic formula or anything like that. It's about understanding those underlying principles of trend following and, supply and demand and how to apply that.
It's like he's giving us this treasure map, and instead of X marks the spot, it's like, high probability setup marks the spot. And it's based on these principles that, anyone can learn.
Exactly. It's not about getting rich quick or, any kind of shortcuts. It's about approaching trading with a long-term mindset.
Right. He seems to really emphasize that, managing risk, being patient, and having a plan.
It's about approaching trading like a craft, something that takes time to develop and hone your skills.
I like that. It's like we're like literally getting a peek into the minds of these institutional traders. It's pretty cool.
Yeah, it is. And, it just goes to show that you don't always have to overcomplicate things.
Right. Sometimes the simplest tools are the best. And speaking of simple, you mentioned earlier that he talks about finding opportunities to profit even in a bearish market.
Right.
Most people are freaking out when the market's going down. He's looking for ways to make money. How does he do that?
Yeah, it's interesting. He's not afraid to go against the grain. Look for those opportunities that other people might miss. And he gives a specific example in the video. He talks about using equal highs.
Equal highs, what are those?
Okay, so imagine the price is in a downtrend. It's making lower highs and lower lows, right? But then, within that downtrend, the price bounces back up, and it briefly touches a previous high.
Okay,
So it creates these equal highs on the chart.
got it.
And, a lot of traders might see that and think, oh, okay, the downtrend is weakening, or maybe it's about to reverse.
Yeah, like the bulls are trying to take control back.
Exactly. But here's the thing. He's saying that even within that bigger downtrend, those equal highs, they can actually present like these little pockets of opportunity, maybe just for, a short-term trade.
So it's like even though the river's flowing downhill, there's this little stream that's like flowing uphill for a bit.
Exactly. It's unexpected. But if you know what to look for, you can potentially take advantage of it.
That's really cool.
Yeah, but he's very clear that this is an advanced concept. It's not something to just jump into without, really understanding what you're doing.
It's all about context. So those equal highs, they need to line up with, the bigger picture, the daily chart trend, and of course, always, always our risk management rules.
Exactly. Couldn't have said it better myself. And, this brings up a really important point. It's not enough to just have a strategy, even a good one, right?
Yeah.
You need the right mindset.
Yeah. This is something we talk about a lot on this show. It's not just about the technical stuff.
Yeah, you got to be able to actually execute.
So what kind of mindset is he talking about? What do we need to be successful swing traders?
Well, he really emphasizes patience, discipline,
Hmm.
and, not getting too emotionally attached to those day-to-day market swings. Remember, swing trading is about those bigger waves.
Right.
You can't get distracted by every little ripple.
It's like surfing, not like, swimming in a pool.
Exactly. You're trying to ride those waves, not get tossed around by them. And that takes a certain level of, mental toughness.
Right. Being in control of your emotions.
Absolutely. And it's not easy. But, that's where having this really clear strategy comes in. It kind of takes the emotion out of it, right? Gives you those rules to follow.
This has been great. We've covered a lot today, from moving average setups to, even those cool little counter trend opportunities. What a deep dive. Any final thoughts before we wrap up?
Well, I think the inner circle trader said it best. It's not about being right. It's about making money. And often, it's those simple strategies that, when applied correctly and with discipline, can be the most profitable.
I love that. Simple but effective. So to everyone listening, remember, master those fundamentals, manage your risk, have a plan, and of course, happy trading.